Surprise, surprise. Boeing reported a horrendous set of numbers today. It's been estimated they're losing roughly $1 billion a month from this machinist strike, and that's on top of the fact they've gotten seemingly forgotten how to make planes. It's a nightmare. So please be sure to buy as much as you can when Boeing prices its upcoming secondary offering in order to shore up its balance sheet and ensure its survival. Huh? That's right. A horrendous quarter. I'm saying try to buy it on weakness? Yes. Welcome to the world of a duopoly, where everybody wins as long as they simply stay in business. That's right. The worse Boeing's financials might be, the better the buy. Because as soon as this machinist strike is over and Boeing raises some money, it'll be back on the road to profitability. Do not get me wrong. This company is in awful shape. But only 2 companies on Earth can make commercial aircraft at scale, and Boeing is one of them. The demand for planes is off the charts. So they'll be fine once they raise the cash. Most current shareholders speak of Boeing in expletives. But when this deal is done, they'll be speaking of it in superlatives, like the ones that new CEO Kelly Ortberg used, to me, tremendous, incredible, to describe the $500 billion worth of orders he has line of sight on, thanks to the world's insatiable demand for travel. What do I think of Boeing, the company? Frankly, it's a colossal disaster with a weak culture, recent history of failure, formerly hands-off management team, and a sense of entitlement and arrogance that can only be rivaled by the newfound Animal House-like reputation. Long gone are the days when my father would cheer when he saw silver B-29s in the sky instead of interminable Japanese Zeros during landing after landing in the South Pacific. There's a generation of people who now think that Boeing, the B-29 maker, is a laughingstock. The fact is, though, Boeing can be fixed. The company does need to get out of what I can only call the extraneous product lines, like its space business, which a previous CEO once told me was superior to Elon Musk's space efforts. Ridiculously wrong. It's got to get back to the basics, building the best aircraft the world has to offer, and it can do that. If Boeing can close out what's losing money and get the machinists back with maximum supervision, they need maximum, then it'll have enough orders to feast on for years. And that's why the stock can spring back. But it is vital, if possible, you wait to buy the stock until they do the secondary offering to give you the ideal buying opportunity. See, if Boeing gets enough money from this equity offering, it won't be downgraded by the rating agencies, and that means it can live to play again. How can they ensure they get enough money? Well, the syndicate managers, the brokerage house minders who run the deal, need to price it in what's known as deep in the hole at a big discount to where it's currently trading. This stock went out at 157 today, up from 146 just 9 days ago. This deal will be vastly oversubscribed at a lower price, meaning money managers will be putting in for much more stock than will be made available because the offering will be done in the hole. That's a sizable discount to where the stock closes the night before. That means these big accounts will get their allocation at bargain basement prices, and then they will most likely buy more in the open market. Otherwise, the positions will be too small to matter, and they'll have a good basis anyway. If you can't get in on the deal, we need to try to find out what the price, where it comes, and then put in limit orders, not market orders, limit orders slightly above the price in the open market to get more stock. More expensive than the actual stock from the deal, but much less than, well, let's say than where it was headed once the balance sheet risk is off the table. Look, Boeing is a gem. I've been to the World War II Museum in New Orleans many a time, and much of it's simply a tribute to their aircraft. Boeing was long the gold standard until it entered a period of purgatory. Can it come back? Of course. But that's because there are only 2 major aircraft companies on Earth, with the other being Airbus. Believe me, if there were a third operator of any sort of proportion, I wouldn't be willing to bet on Boeing. But there isn't. Try to get some stock on this ne'er-do-well company's equity offering. When the deal comes, Boeing will no longer be a ne'er-do-well, because once the strike is settled and the balance sheet's cleaned up, it will be a living, breathing business again, one with strong demand and not enough supply. That is always a great place for business to be. I'd like to say, as always, bull market summary. I promise certified just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.